Right, guys, my breakdown for this upcoming week for forex, foreign currencies, etc. We usually want to guess. We usually just want to know which direction the dollar index is going to go in, and then naturally from there we're going to know which direction foreign currency is going to go in because they're inversely correlated. And for that, we need to do some intermarket analysis and some analysis of commitment of traders, etc. So immediately, what I've looked at is I've looked at some different categories of within my intermarket analysis. So I look at grains. Within grains specifically, I track wheat, corn, and soybeans. I look at livestock, so I track live cattle, feeder cattle, and lean hogs. And then I also track some of the softs. I track five of the softs, so cocoa, sugar, coffee, orange juice, and cotton. And from there, I track some of the currencies. So I track I track the dollar index, obviously, the British pound, the Japanese yen, Canadian Swiss franc, euro, Australian, etc. And just try and get a feel for how the market is working together on a macro level, and basically seeing which direction each market is pointing more towards, considering the relationships, the direct and inverse relationships between each of the set markets. So let's typically start off with grains, and let's look at where we are for grains here. So on a 3-month horizon, we have volume, and this purple line represents open interest. For those of you that don't know, open interest is simply the amount of short orders within the market. So yeah, just the amount of the cumulative short orders within the market is what I would describe open interest as. And then here we have commitment of traders. They are seeing which way commercial funds are hedging, whether it be bullish or bearish. Now here, I just immediately went down here just to see, okay, open interest, we've taken a dive, right? Having some bearish price action up until, and then we took our dive around here, right? Forming our institutional swing point here. So it looks like we could be seeing a reversal, with a drop off of short orders and also smart money hedging bullishly. So if we move on to corn, let's go to the May contract. Moving on to corn, same thing. We see a drop off of the short orders in the marketplace, but we see some slight bearish hedging by smart money. Also with some bearish price action in the previous dealing range over here, and working within this new dealing range, we see some consolidation, but some drop off of open interest. So we can probably expect a rally coming in the 3-month horizon. Now, soybeans is going to be the tiebreaker. We have one bullish, one bearish. So soybeans is going to be our sort of tiebreaker here to see which direction we favor grains going in. We do see a less of a drop off on open interest for soybeans, but we do see that smart money is hedging bullishly on soybeans ever so slightly. So overall, we're gonna say here that it seems that grains on a whole are bullish. Also keeping in the back of our mind that we just received news that Iran and Israel are having, a conflict right now, a pretty heated conflict, which is inevitably going to cause markets like gold and commodities to gap going up. Um, and since commodities and precious metals, etc., are inversely proportional to the dollar, maybe we could see the dollar heading down and gapping down. But that's a maybe, right? We want to consider a plethora of things when we do our analysis. And if we just take a quick look at live cattle's April contract, you see the same thing, huge drop off of open interest with this bearish price action. And we can see us hedging short, commercials are hedging short. And if we just move into our next one, so what did we just do here? We did live cattle, so let's go to feeder cattle. April contract, full chart. Now we see the same thing, huge drop off of short orders, meaning that buying is likely to start in the near future. Also, we see they're hedging bullishly, so that those two things are in confluence with each other. When we want to talk about where smart money is likely to want to go in terms of booking their orders. And overall, we just see some bearish price action here, pretty standard stuff, lower highs, lower lows. Now with lean hogs, which is the last thing that I track from the livestock section, we see them hedging bearishly immediately, and we see that they are booking more short orders, right? But 2 out of 3 of the ones that we track were hedging bearishly. Combined with the fundamental, it seems that livestock is likely to gap upwards as well, being that it is a commodity. Then going towards, I usually track a bit of softs as well. So like orange juice, coffee, sugar, cocoa. But they tend to stay neutral. So you will have some that just, kind of off balance. So they don't necessarily move as a unit. They'll more so be weighed by supply and demand factors more so than the grains or the livestock. So they'll be less likely to move together. So softs are kind of neutral for this week, as they have been in past weeks. Taking a look at the dollar index, if we just look at the June contract, we can see that smart money are hedging bullishly on the dollar. However, we can also see that we are in a deep premium also, that we've built in a lot more short orders. So what we could see is very, very easily a sharp push down, considering fundamentals, considering how commodities are moving, considering it's in a premium, considering all of these factors, right? So that's something that we can revisit when we come back to our analysis of the dollar index, to looking for some confluence with regards to the news outlets. We typically want to be diametrically opposed to whatever the news is releasing. So if the news are saying that the dollar is bullish and we think that it's bearish, that's probably a good sign, because usually the news outlets like to trip people up, I'd like to say. See if we can get any news here. Stocks started from Friday fears wider Mid East conflict. Bitcoin is off weekend lows. So here, when we go onto our news outlet website, what we're mainly looking for is we're looking for some indication, some insights with regards to specifically the dollar index or even the Dow Jones, like stock indices like the Dow Jones, S&P 500, or Nas 100. Dow Jones futures loom after yeah. So this is essentially saying that the stock market is likely to gap downwards, which is to be expected because people like to draw their money out of things that have no innate value and put them to things that have like innate value, like gold and various other physical assets that you can touch, rather than keeping it in fiat currencies or even cryptocurrencies. What else here? Nothing specifically about the dollar index, which is kind of what we're looking out for. So we can move on now to the Wall Street Journal and see if we can find um, anything regarding the dollar index. So if we can go into finance, go into currencies. Right, so seeing the dollar may stay stronger for longer. Yeah, nothing yet. There's a lot of uncertainty, obviously. We can expect when market opens for the dollar to gap down, but after that we don't really know. And the news drivers on the economic calendar, which we're going to come to, which are meant to drive price and we're meant to speculate around, are going to have less of an impact because of the uncertainty due to the war that's just broken out. Nothing here sticks out to me with regards to the dollar index. So that's basically us done with looking for further confluence with markets. So we've gone through COT, we've gone through our intermarket analysis of different markets, generally respecting, generally the overarching tone of the other markets is that they're moving as opposed to with respect to the dollar index. The dollar index right now is very bullish, and they're moving and respecting bearish premium arrays, right? So they're moving downwards steadily. Dollar index has been moving upwards steadily, respecting discount PD arrays. So everything looks normal for now, obviously. But with the news, which cannot be stressed enough, it's very, very important that we consider the news and what's been going on. It's very important that we make sure that we place that as what's going to be the main driver for the markets this week, and maybe even consider not trading this week. That could also be a possibility. If we look at the economic calendar, Monday, so let me just put this in New York time. because I like to work off of New York time, especially even on my charts, on the news, etc. Everything I like it to all be working off of New York time. Right, there we go. So for the US dollar, we have news at New York Open. Um, very, very standard stuff. Not anything crazy that we need to worry about, but they are high impact news and they're all releasing at the same time. So Monday was looking like a good setup, but again, that could change due to the nature of the markets this week and the fundamental news drivers. Tuesday was also looking like a good day, looking like a good London day, looking like a good New York day as well, with building permits being the only USD driver, and then we have a London closed new USD driver on Tuesday as well. So Tuesday was looking like a decent trading day as well. Wednesday was something that I looked at and I was like, I'm not really a fan of trading on Wednesday, just due to the fact that there is no New York news, and also I wouldn't necessarily trade with this high impact news of the pound. Um, so yeah, I just didn't plan to trade on Wednesday, but there is something interesting here. We have FOMC medium impact news around 5:30 p.m. and that's going to cause some news within our central bank dealers range, which would have made it um, a slightly larger range, which would have indicated that Thursday would have been a nice trading day. Good for London, especially if Asia was to consolidate really well on Wednesday, and also very good for New York Open on Thursday as well. And then Friday, I just didn't plan to trade. So Thursday, Tuesday, and Monday were like my trading days for the upcoming week. But we'll really have to see how the market behaves and how, when it settles, what it looks like in terms of after the gap down, inevitably for the dollar, what we're kind of searching for and what we'll be respecting in terms of bullish and bearish PDAs. So yeah, without further ado, yeah, that is my market breakdown. I do believe if we just head over onto TradingView, and I'll just do a DXY breakdown for you guys. Mashallah, see you then. So let's wrap this up so we can go pray. So what we see here is if we just start on the monthly time frame, we see that we're in this long-term consolidation here, and we're approaching this drawn liquidity up here. If we drop down into the weekly time frame, you can see that price has been respecting bullish PDAs very well. Just to name a few, we had this sell side imbalance here, which then was flipped into a inverse fair value gap. I like to color my inverse fair value gaps in yellow. It reminds me of like the reverse flush. So that's why I like to do it like that. Straighten that out there. So yeah, we see inverse fair bullishly flipped inverse fair value gap here, and in, I know you can't see it here, but in here on the daily time frame there is a daily bullish breaker. Also have this weekly bullish order block right in here, and this weekly bullish order block right in here. And it looks as though the drawn liquidity is up here, right? Taking this intermediate term high. And potentially, if we do get a continuation to the upside, which again is quite unlikely with the fundamental news drivers at the moment, but if we were to get a continuation to the upside, then we would be breaking out of that long-term consolidation. But I think it's highly unlikely. Not highly unlikely, actually. I think this week, it's unlikely that we break out of the consolidation. Why? Because we need to settle down. We need to actually see, is this going to start World War III? Because that is a possibility. But like we've seen a lot with even like the Ukraine and Russia war, there was a lot more fear than was warranted, right? The fear died down a lot after the weeks, and the market settled and started returning to regular price action. And I think that's what is likely to happen here as well. We're going to get a lot of fear in the first sort of week or two, and then we're going to die down and return back to regular price action. So we could see ourselves grab this liquidity here and then head down, or we could see ourselves gap down straight away on the market open. Right, guys. I did forget to film my outro, but yeah, today's the next day. It's Monday. Going into the next trading day, didn't see any spikes in price, but price wasn't moving nicely either. So I guess it's an indication that there is some uncertainty in the markets, obviously, with the world events and whatever, which is making it a bit difficult to trade, but there were no spikes. So it looks as though we're going with our other contingency, whereby if there's no spikes, then we're just going to expect the drawn liquidity this week for the dollar. But yeah, that's been the weekly breakdown. You guys get an insight as to how I go about my weekly breakdowns and basically how I view the markets. So yeah, this will be like a continued series every week. I'm planning to drop a weekly breakdown video, just so that you guys can get a feel on how to actually analyze the markets, and not just base your market analysis on one thing, but get a more broad picture of how the macroeconomy is performing as a whole, and the geopolitical events and things of that nature. But as usual, if you guys enjoyed this, please like, subscribe, leave a comment down below, and I'll see you guys next week with another weekly breakdown video.